Our economic strength going into this crisis has given us the financial firepower to respond during this crisis. The actions we have taken have saved lives and livelihoods. Australia has performed better on the health and economic front than almost any other nation in the world. The impact of the coronavirus has led to a significant decline in tax receipts and a large increase in government payments. This has driven a dramatic change in the budget's position. These harsh numbers reflect the harsh reality we face. The economic outlook remains very uncertain. Recent events in Victoria are testament to this. A painful reminder how a setback in combating the virus can impact the speed and the trajectory of our national economic recovery. In the economic numbers released today, Treasury are forecasting real GDP to have fallen by 7% in the June quarter, with household consumption, dwelling investment, business investment and exports all expected to fall as a result of the COVID crisis. Real GDP is expected to fall 3.75% in calendar year 2020, but grow by 2.5% in calendar year 2021. In financial year terms, real GDP is expected to have fallen by 0.25% in 2019-2020 and 2.5% in 2020-21. During this crisis, fiscal support will be a primary contributor to GDP. Treasury estimate that the fiscal support has increased the level of real GDP by 0.75% in 2019-2020 and will increase the real level of GDP by 4.25% in 2020-21. Treasury has based their assumptions on Victoria being in lockdown for 6 weeks from the 9th of July, after which restrictions are progressively eased. Other states are assumed to be gradually opening up in accordance with the plan agreed by the National Cabinet on the 8th of May. One of the largest impacts of this crisis is its effect on the labour market. Between March and May, 870,000 jobs were lost, and more than 1 million Australians saw their working hours reduced, in many cases to zero. These are mums and dads, sons and daughters, friends and colleagues. And at 7.4% in June, the official unemployment rate is expected to peak at around 9.25% in the December quarter this year. Without the government's economic support measures, unemployment would have peaked at 5 percentage points higher. The government's economic measures have saved 700,000 jobs. And as we move to the next phase of this crisis, our JobMaker plan will get Australians back into jobs. As part of our JobMaker plan, we have already announced 2 million job trainer skills, a $2 billion job trainer skills package, an extension of our 50% wage subsidy for apprentices and trainees, and the creation of a national fund for job seekers to reskill and upskill. A higher education relief package that will subsidise short courses in critical areas like nursing, teaching and science to help Australians get back into work as quickly as possible. We have also announced $2 billion for priority infrastructure shovel-ready projects to support local jobs, and a home builder package that will support an additional $1.6 billion in dwelling investment in 2020 and 2021. Deregulation and a more flexible industrial relations system, including the continuation of the temporary changes we have made in response to the crisis, will be central to our plan for jobs. The coronavirus has had a significant impact on the budget bottom line. Our fiscal measures have been worth $164 billion, equivalent to around 8.3% of GDP. Of this, and this is a critically important point, 99% of our spending is over the two financial years, 2019-2020 and 2020-21. Our measures have been temporary, they've been targeted, and they have helped maintain the structural integrity of the budget. This includes the $86 billion JobKeeper program, which is today supporting 3.5 million workers, or 30% of the pre-COVID private sector workforce. The $16.8 billion coronavirus supplement has also been important to cushion the blow for more than 2 million Australians who are on income support. And the Morrison government has also delivered 2 cash payments of $750 for more than 3 million pensioners, a $31.9 billion cash flow boost for 760,000 small and medium-sized businesses, and $9.4 billion for additional health measures for personal protective equipment, expanded telehealth services and boosting Australia's hospital and pathology capacity. Every resource available to the government has been marshalled to defend the nation against the coronavirus. And as a result of the coronavirus, tax receipts have been revised down by $95.6 billion, of which $31.7 billion is in 2019-2020 and $63.9 billion is in 2021. Personal income tax, company tax and GST receipts are all down. As a consequence of lower receipts and higher payments, the deficit is estimated to be $85.8 billion, or 4.3% of GDP in 2019-2020, and $184.5 billion, or 9.7% of GDP in 2020-21. These deficits reveal the real cost to the budget of protecting lives and livelihoods as a result of the coronavirus. The pandemic has also led to a sharp increase in Australia's government debt. Gross debt was $684.3 billion, or 34.4% of GDP at the 30th of June 2020, and is expected to be $851.9 billion, or 45% of GDP at the 30th of June 2021. However, with a debt servicing cost of 0.8% of GDP in 2019-2020, owing to historically low interest rates, our debt burden remains manageable. Net debt is expected to be $488.2 billion, or 24.6% of GDP at the 30th of June this year, and is expected to be $677.1 billion, or 35.7% of GDP at the 30th of June next year. Despite our increased debt levels, they remain lower than what many comparable nations went into this crisis with. The average debt to GDP ratio for major advanced economies is now expected to exceed 100% in 2020. Australia's strong fiscal position has seen our AAA credit rating reaffirmed by all 3 major credit rating agencies during this pandemic, and we have been singled out by the International Monetary Fund to be the only developed economy to have its economic outlook upgraded this calendar year. Australia is experiencing a health and economic crisis like nothing we have seen in the last 100 years. Tragically, 128 Australians have lost their lives as a result of COVID-19. And as we stand here today, more than 5 million of my fellow Victorians are in lockdown. Our economy has taken a big hit, and there are many challenges we confront. We can see the mountain ahead, and Australia begins the climb.